Glad to have you with us. So, to start with, Indraneel, I would love for you to share a bit about you and SimpleWorks.
Sure. So I have more than 2 decades of experience in developing enterprise software solutions like ERP, HRM, vendor management systems, and so on. So for the first 10 years of my career, I was in the US working as a product manager for an ERP solution. And SimpleWorks itself, I started after I came back from the US after a few years. And SimpleWorks, we have just completed 10 years of SimpleWorks. And in SimpleWorks, we provide customer engagement solutions, your lead management, your service automation, your customer 360 solutions, AI, agentic AI solutions for the banking, financial services, and the insurance sectors.
Perfect. So, Indraneel, now that you mentioned about agent and agentic solutions, I know that the industry, there has been a lot of talk about such solutions in the industry since last year specifically. And now that we are already seeing some of the major software vendors announcing their initial pricing models for such solutions, behind the scenes, I'm also talking to several startups who are actively working through their pricing strategy. One part definitely is to ensure that that drives revenue, but also to understand how to shape the product positioning, how to accelerate the customer adoption. And what I see is the most critical part is to build a sustainable business model around agents, right? And talking about sustainability, I just want to understand more about what exactly is it that is challenging in terms of AI agents when it comes to pricing, and what has changed from traditional seat-based SaaS models?
That's an excellent question. And many of the organizations are still trying to figure things around. So I'll share my experience around it. So let me kind of take a little bit of let me elaborate with the background. So currently, we are using the traditional software as a service model, right? But the precursor to that was upfront license model some 20, 25 years ago. And Oracle used to sell solutions as per that. So the problem obviously was you invest a lot of money upfront, and then if it doesn't work out, then that's a problem for you. So Salesforce pioneered or was one of the pioneers of the software as service model, right? And then they started selling CRM in a software as service basis. So which meant the charging happened on per seat basis or a per user per year kind of a basis. So it solved some problems of the upfront license model in the sense that the cost actually got distributed over a bunch of years. And if some things are not working out for you, you can maybe stop paying for the subscription and do something else. Okay, and that's still the model that most of the SaaS companies are currently following. Now, there are, of course, there are challenges and problems with that also. And many organizations face the problem of adoption. So let's say a bank might have purchased some kind of a solution, CRM solution, any solution for that matter, for, let's say, 1,000 seats, and they're paying for 1,000 seats per year basis, right? But maybe only 200 users are active, and other 800 users are kind of semi-active, right? So irrespective of how much of the solution, the software, the product the bank is consuming or deriving value out of, they still have to pay for those 1,000 users, right? So then the model kind of shifted, and it's still people are experimenting with it, especially after the advent of Gen AI and agentic AI, which is the consumption-based models. Okay, where like some people are calling it as service as software, right? So in that, the customers or the organizations pay for what they consume. Okay, and it has started a little bit before, right? Even before the AI and agentic AI, if you look at what Twilio has been doing, what Zapier has been doing, what Snowflake has been doing, right? So they have already been charging based on, let's say, the number of APIs consumed, okay, number of processing units consumed, number of storage units consumed. So the consumption-based pricing had already started, and these companies have shown that it does work. And with AI and agentic AI, that is even more so. Like if you look at, let's say, OpenAI's API service, I'm not talking about ChatGPT part of it, the OpenAI API service where they charge you based on the number of tokens consumed. So does Google Cloud Platform does it for their Gemini APIs, right? Number of tokens consumed. So that is the usage-based pricing, and we are seeing more of the usage-based pricing now, kind of being adopted by actually certain product or solutions providers. And even that has further evolved actually. Now, if you look at the further evolution of that, that has now, especially with, let's say, agents, AI agents, right? AI agents produce outcome. So for example, if I'm using a sales development rep kind of an agent, it's going to generate leads for me. It's going to qualify the lead for me. So some of the agentic AI solution vendors are now kind of adopting or trying to charge based on the outcomes. So if I'm creating, let's say, 100 qualified leads for you, then you pay me per qualified lead. So don't pay me based on the number of seats. Don't pay me based on number of tokens or APIs, whatever consumed, but now pay me based on the like the outcome that I'm creating. So the kind of a pricing mechanism is moving from your upfront licensing to your traditional SaaS-based licensing to your consumption-based pricing, and now towards outcome-based pricing. So it's kind of an evolution that's happening right now.
Is it like on a case-to-case basis, like every customer might have their own definition of outcome? And how much of a flexibility can an enterprise offer when they provide such kind of solutions?
So actually, again, it's and you actually rightly pointed out that defining outcome is tricky. Okay, and it's very much on a case-by-case basis. So one example I was talking about was the creating qualified leads. Now that's an easier way of defining an outcome that most organizations, even the customer will agree and the vendor will agree. Okay, based on the qualified lead, based on a certain criteria. But if you're talking about, okay, if you adopt my agentic AI solutions, I'm going to increase your revenue by X percentage, or if I'm going to increase your CSAT or NPS ratings by some numbers, right? Now, if you talk about these kind of outcomes, and which are very kind of dear to the organizations, they are actually difficult to quantify. Right? If I say, okay, I'm going to increase your CSAT from, let's say, 7 to 9 through my solution. Now, did it really increase solely because of my solution, or because maybe some of the other initiatives that the organization might have taken? So in some cases, it's a little bit difficult to define the outcome. In certain cases, it's easier to define the outcome, and that's where the outcome-based kind of pricing works. But I think vendors are also offering this hybrid kind of a pricing, right? So you pay me certain amount for my solution, okay, on a per month basis. And so that there is predictability for me as a vendor that, yes, I know what annuity stream I'm going to get. There is some budgeting predictability for the organization also. And then if there is an upside to the customer where they are deriving value, however that value might be defined, then vendor also says, okay, I want a small kind of a percentage of the value that I'm generating for you. So I don't have a definite answer, but it's kind of still in the flux, and people are experimenting and working out like what does outcome mean. And then I think there are some low-hanging fruits which people are going after, and basically putting prices based on that. And yeah, I think for others, hybrid pricing is the way to go.
Okay, so Indraneel, let me just also summarize what we have discussed so far is on the consumption-based pricing, then on the outcome-based, and then some companies are experimenting with hybrid model because we want it to be a win-win for both the enterprise and the customers. Now, what other pricing models do you see are working out for the companies in the industry as well?
So, I mean, the pricing models are kind of some combination of this itself.
Okay.
Like if I have to take an example, maybe, okay, so let's say, some companies are, if you're looking at a traditional SaaS space or a per seat pricing, right? And it's, let's say, $50 per user per month. Then on a monthly basis for 50 users, the customers might pay, let's say, $2,500 a month. Okay, whereas if they are, if the vendor is charging them on a pure consumption-based pricing, where they might say that, okay, I'm going to charge you, let's say, 0.5 cents per email, or maybe 20 cents a lead, or let's say 1 cent per API call, or something like that. Then if you're looking at, let's say, 100K emails and 50K APIs, we are probably talking about some $1,300 kind of per month. Now, the same customer on a traditional based pricing might be paying 2,500. In this case, they may be paying some $1,300 kind of a month. Yet another way could be the outcome based pricing, where the vendor is saying, okay, you know what, you just pay me $50 per qualified lead. And if I'm generating 40 qualified leads for you in a month, you pay me about 2,000 or some combination of that. And also this varies across the industries also. So we typically deal with the banking, financial services, and the insurance industry, right, where there is a lot of regulation is there, and they have a very clear kind of a budgeting requirements. So for this sector, at least, a very important thing for them is the predictability. Okay, so to give an example, we have one of our life insurance customers, and they wanted a email triaging, like a email triaging solution. So they get some 8,000 to 10,000 emails a day, and then somebody has to manually review the content of the email and then categorize that email. Okay, it's a complaint, it's a service request, and there are about 200 categories across which they have to categorize that particular email. Now they wanted a automated way of doing it. So we implemented a kind of a combination of machine learning and a Gen AI solution for this problem, where it just understands the email content and automatically categorizes it and then sends through the workflow. So what used to take, let's say, 3-4 hours from a manual method of, let's say, classifying 1,000 or 2,000 emails, now it takes a couple of minutes. So in this case, we went ahead and we basically offered to the customer that, you know what, you just pay us based on the outcome. Okay, there is no cost for you. It's free. So you pay me certain thing per rightly triaged email, and you levy a penalty for incorrectly triaged email. So if I'm 50% right, you pay zero. If I'm 60, 70%, then you pay something, but it's still lesser than what I might charge you, let's say, for development or a recurring fees. But if my accuracy reaches 90% and above, then obviously you are deriving a lot of value out of it. But then what they pay us also increases significantly as compared to what they would have paid on a recurring basis. So we offered that model, and then we also offered them a traditional kind of a recurring model, pricing model. So they were very intrigued by the outcome-based pricing, and they spent a lot of time kind of evaluating that. But ultimately, they came back and okay, while this is very interesting for us, but it doesn't really fit into our the way we kind of budget for something, and so the way basically we calculate our cash outflows, and we are not even sure regulation-wise whether this will be allowed for us or not. So they eventually went ahead and chose the traditional kind of a SaaS kind of a price. So I'm just giving that example as a so that it depends a lot, okay, on the industry that you are targeting, and especially if you are looking at this BFSI kind of industries, I think it takes more time for them to go with kind of outcome-based or consumption based pricing, and they're more likely to stick to traditional pricing models, or at most they will kind of switch to a hybrid pricing models. And then if you look at from the vendor side also, hybrid pricing models is something people are using. Like at SimpleWorks also, we offer hybrid pricing model. Then you also have Monday.com. You also have who are also kind of experimenting with hybrid pricing model, where there is a X per seat or a per seat license, a small amount. But then there is also usage-based AI credits that the customers will pay based on their usage. So yeah, so it's things are in a flux basically, and I think which pricing model kind of ultimately, I mean, there is no winning of a particular pricing model. I think it will depend on industry to industry, and I think hybrid pricing model actually will work out in most of the situations where from the customer's organization perspective, they are able to get some predictability that a traditional pricing model offers, and at the same time, they are also able to derive like some semblance of I'm paying for what I'm actually deriving out of a particular solution. So I think hybrid pricing models should work out for most of the people.
So what kind of variability do you incur when you're building a solution? And that's, I think, one of the driving factors as well for you to design a pricing strategy for that.
Yes, that's true. From the solution provider perspective, and there are multiple kind of factors involved. One of the key factors is if you are going to do consumption-based pricing, okay, so then you need to have very strong mechanisms to accurately measure the consumption metrics. It's very easy for a solution provider to measure number of users, number of active users in a system, right? And it's very easy to kind of charge based on it. But to accurately measure the number of APIs, okay, the number of tokens or whatever, like number of compute space, whatever is being used. So that's a little bit tricky. So first of all, it's not insurmountable problem, and there are people or the companies doing it. But you need to have a very robust mechanism to be able to track the consumption. So that's number one. And if you're looking at the outcome-based pricing, and as we were talking about, in some cases the outcomes are easier to define, like say qualified lead kind of a outcome. Whereas some of the other outcomes are much more difficult to define, and they have to be done on a case by case basis. In terms of the business model, like if you do this consumption based pricing or even the outcome based pricing, so as a software vendor, you have to adopt that land and expand model. Okay, and with that, a lot of additional kind of considerations come into play. So let's say your salesperson is closing a deal, and the initial deal value may be pretty low because it's based on you're going to build them based on the consumption, let's say, right? You have, but as the customer or the organization starts using the system and they start getting value out of it and they consume more and more, then your actually billing increases. So your business model has to take that into account. Your sales incentives have to take that into account, because there may be a smaller incentive that the salesperson gets when they close the order, because the initial billing is actually low. And then as the customer starts using the system, I think you need to have the incentive mechanism that if the customer is using that system for, let's say, 12 months, and based on their increased billing, the salesperson actually gets some incentive. And then it's also kind of an incentive for the salesperson to remain kind of engaged with the customer, okay, to nurture the customer and to make sure that they are actually adopting what you're selling and they're using what you're selling, so that their consumption increases, so they also benefit and the salesperson also benefit. So that's one thing that you have to kind of work out. Another aspect of it is, let's say, even your marketing, right? From a SaaS vendor perspective, the marketing also language has to change. Typically for the SaaS products, a lot of the marketing is based on the features and functionality. But when you're talking about consumption-based pricing or the outcome-based pricing, the marketing language has to change. Now the marketing people have to talk about the value that will be created, for you when you are using my solution. So there has to be some shift in that marketing as well. And then the third area where like any vendor who wants to adopt this kind of a consumption-based pricing, especially for the AI and agentic AI solutions, because there is the customer support also has to transform. Now, if you're looking at this AI and agentic AI solution, there are a lot of prompt engineering is required, okay, on your agents, on your Gen AI solution, so that the whatever solution you have deployed is relevant and keeps working for the growing and changing needs of the customer. So there is a lot of training that has to be given to the customer support team also, so that they are able to help the customer increase the use of your solution, and they benefiting it, and then the company also benefits. So yeah, so then there are multiple angles to it. I can also talk about maybe from if you are talking about the business model, like how the fundraise angle also changes. If a company wants to adopt, let's say, this consumption-based pricing, right? Then the traditional metrics don't really apply, because you can't really go with the ARR, right? So if I am, for example, today making a pitch to an investor, I'll say, okay, this is my ARR. When I'm raising funds, they'll apply some multiple of my ARR to come up with the valuation of the company, right? But if you're doing this land and expand model and you're going to bill based on the consumption, so the ARR actually, I mean, that's not a good metric anymore, right? Then you have to talk about something like net revenue retained, or NRR metrics, okay, which basically says, okay, over a period of time, how much more revenue you are generating from a given customer. So that actually becomes a metric for you to evaluate yourself and the investors to evaluate you, like NRR instead of ARR. So multiple aspects are there, and all those aspects have to be kind of thought through. A SaaS vendor wants to, especially when a like a SaaS vendor like us wants to make a switch from a pure SaaS-based pricing to some kind of a hybrid pricing where there is going to be some combination of ARR, NRR, and consumption and land and expand models.
Yeah, definitely. And Indraneel, can you just also like double click on RRR, NRR again? Like, so because ARR, land and expand, these are still like more understandable terms, but this
Yeah.
one maybe would be new for some people. Yeah.
Sure. No problem. So first I'll talk about ARR. I think everybody understands ARR, but just for the sake of completeness, it's an annual recurring revenue. So if I'm billing, let's say 5,000 seats per year, so it's very easy to, and it's a 5-year contract, right? So it's very easy to understand how much billing I'm going to get from that particular customer. And it's like an annuity, right? And investors love annuity. So when they are actually valuing you, let's say you have most of your revenue is a recurring revenue ARR, and only a little bit is on the professional services, which is the services based. So they will give you a much higher multiple for the recurring revenue ARR versus the services revenue when they are valuing you. Now, in this, if you are going to charge based on the consumption or based on the outcome, your ARR, there is no per seat basis pricing, right? So you can't really use ARR. So one of the metrics that can be used is a NRR, which is your net revenue retained. So let's say if I onboard a customer today and start billing them, I don't know, maybe let's say $50,000 per year as a base fees, and then there is certain amount that I'm going to charge them based on the consumption. So over the period of let's say 12 months, 18 months, 24 months, okay, what I would like to measure or what an investor would like to understand is how much more revenue have you generated from this customer since you onboarded them. Okay, so the amount of revenue you are going to generate out of this customer has to increase over a period of time, because you are saying that as the consumption increases, I also get to bill more. So uh, the net revenue retained, okay, and how much billing revenue is still there, and how much more you are able to get from the customer, increases your consumption of your services. So that's what actually NRR measures. So
Perfect.
it kind of measures your upsells and increase usage, and then minus your downgrades and churn revenue, and then you come up with this NRR number.
All right. So, Indraneel, on this aspect, I have one more element to share where somewhere I think you mentioned about the customer having the ability to put a penalty if the outcome is not as what they were expecting, right? So, I'm hearing that for the first time. So, is this happening really on the ground? Because AI is probabilistic by nature. Agentic AI being autonomous are even more so, right? So, you have little control on that. So, how do you ensure that first that scenario doesn't happen based on the offerings that you're giving, right? So, how to ensure that? And secondly, if that happens, is it more like a understanding that this is how these solutions work? And then how do you kind of navigate those situations where the penalty aspects are being discussed?
Sure. So actually, in the example that I was giving, the customer didn't ask for a penalty. We actually
Okay.
offered them on our own because we really wanted them to go for the option number 2,
Okay.
the kind of a consumption based. And there is a reason we offered that. Okay, I mean, because we had already tested this the AI and Gen AI based email triaging, and in our test we were already getting this 85 to 90% accuracy and precision.
Hmm.
So
Hmm.
we were very confident of our solution, and that is also the reason we said, okay, we are okay, since we know that our solution works, so we will go and offer them a penalty also if we incorrectly triage it. And that also, I mean, it was also kind of we are hoping it would be a reason for them to go for it. That
Hmm.
it's not that the vendor is saying, okay, if your usage increases, I'll charge you, but then the vendor is also willing to take the responsibility that if the software or the value is not delivered or the outcome is not there, then they are willing to take a penalty also. So that was more of from that perspective. And at the same time, see, you also protect yourself contractually also, right? So at no point the contractual language was such that at no point the let's say the billing minus penalty goes below 0. So those limits are put contractually that and there is no negative kind of, there is no out of the pocket expense as such for the vendor. So if for whatever reason the penalty exceeds the billing, then it remains 0. So there is no kind of a penalty. Well, I mean, you don't want to get into that situation anyway, because that means this product is your solution is not delivering any value. But
Yeah.
contractually, you can protect yourself in that case.
Where do you see the industry in terms of either pricing or overall in terms of agentic AI trend going forward from here?
Okay, so I think I'm kind of oversaying this word hybrid pricing, but I really believe that's where things are going. I'll take our own example, right?
Yeah.
So traditionally, we have been CRM vendor, customer relationship management, and that's the solution that we have been offering to customers since last 10 years. But let's say maybe 2 to 3 years ago, we also started kind of building and selling AI solutions. First, the traditional ML solution, machine learning solution, and now also the AI. So the agentic AI solution that we have developed, we call it Aryabot, and it's kind of a play on the Indian sage Aryabhat. So the way it works, Aryabot actually works as a sales coach. So it will tell the salespeople, okay, this is what you should do to convert this opportunity or close this opportunity. Or it will help a service representative, okay, this is how you go and solve this tickets. Or it could help, let's say, compliance team in the let's say the bank. Okay, if there are those 500, 600 RBI documents, okay, and if they ask any question, it finds all the relevant information and presents it to them. Now, for the Aryabot kind of a solution, we are billing based on the number of queries. Okay, so we say, okay, per 5,000 queries, this is what you'll have to pay me. You'll have to pay me minimum for 5,000 queries, because then that actually helps us have some predictability of what we are going to get on a month-on-month basis. And then if it goes beyond 5,000, then this is what actually you pay. So, and for our traditional CRM business, service automation and the lead management solutions, we are still as of now, we are still on the traditional SaaS per seat basis. But then for this AI and agentic AI solution, we are having this kind of a consumption-based or the outcome-based pricing. And then when we have a deal which requires the traditional CRM plus the AI and agentic AI solution, then it kind of becomes a kind of hybrid pricing, really. Yeah.
Perfect. And in that regard, Indraneel, there's one more concept that's coming to my mind, is that a lot of companies are thinking about like the package aspect that we are discussing. Either agentic AI is going to be projected as a feature or as a product. Like, so what is your take on that?
Okay. Agentic AI as a product, right? So I think things are changing so fast. Okay, now just 12 months ago, okay, there were companies who basically had solutions purely on agentic AI. Okay, we are going to do. Let's take the simplest example as the SDRs right? So, or even kind of a voice bots kind of thing. Now, if they had this solution purely based on this, but now as the models are improving, what is coming from, let's say, Claude, or what is coming from the OpenAI or even Llama 3.2, and these frameworks are coming like Creo AI and so on. So it is becoming more and more easy to kind of deliver exactly same kind of solutions. So even the technology, like the IT divisions in the larger enterprises, instead of buying a agentic AI solution from the vendor, in some cases, they said, okay, I already have all these frameworks. I already have such a great LLM, and the prices have come down of the LLM as well. So let me go and develop it in-house. So yeah, so if you're saying that, okay, my solution is purely based on agentic AI, I think the moat is really, shallow for that. Okay, so I think we still have to go back to this is a problem I'm going to solve. Okay, AI, agentic AI, just one of the many tools that I have at my disposal to solve this particular problem. I think that mindset has, that still applies. Okay, so the bigger the problem you are trying to solve, the bigger the moat you are actually building. And agentic AI and AI just happens to be one of the tools that you are using to solve that problem. So rather than, at least I kind of subscribe to that. I'm going to solve this problem instead of, okay, I have this agentic AI solution with these features and functionalities and whatnot, which is easy to get replicated.
I agree with that, because the way that you also explained, right, Indraneel, it looks like there is a bigger risk of commoditization. But do you think it's very difficult for the existing businesses to kind of pivot fast, or current business problems the industry is facing, and I'm just being more of a solution provider rather than just fixating myself on the technology aspect? So if I'm not just proposing technology, I'm and the reason I'm giving you a background on this, because most of the companies are selling on the premise of, hey, this is built on agents, and that because agents are selling, that's why my solution will sell, rather than the organic problem that the solution is being originally made for. So what exactly do you think would make businesses survive in this kind of economy where things from the solution perspectives are moving so fast? How do you find your mode? Because finding differentiator, like you're saying, truly is becoming so difficult and shallow.
Yeah, so I think technology, okay, so unless you are, let's say, a company like OpenAI, or you are Google Gemini, or I would say put maybe Perplexity also as part of that. And even then, actually the moat is not there. Like we know how
Yes.
what DeepSeek did. And so even there, the moat doesn't work. Okay, so it doesn't even work for them. But for other businesses, see, most of the software solutions, right? They are not the LLM OEMs. They are actually they're kind of building wrappers, okay, wrappers around this kind of LLMs to solve a particular problem. So I don't think technology can be your moat in this case, because the situation is changing so fast. Okay, whatever model you may be using as part of your solution, you will have a much better model at much cheaper price, maybe 12 months down the line. So technology is not going to be your moat. The moat could be the solution that you have created to solve that problem. Okay, so what kind of domain experience probably you have, and what kind of experience you have in solving that problems. Maybe what kind of referenceable customers you have who are ready to say, okay, yes, yeah, I can vouch that this particular solution has solved my problem. So the traditional things, okay, the moat is still going to be the traditional things that any product company or solutions company has. So that's not going to change. Okay, like I said, like AI, agentic AI, it's just a kind of a tool right now.
I think that's the particular thing I was looking for, like agents, agentic AI, these are just the tools. And on that note, I'll just conclude this discussion. Thank you so much for joining us today, and I look forward to connecting soon.